Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
We want to stay with tariffs for a moment, because if you're thinking of buying a new car, you might want to think too about having to spend a bunch more money, because if impending tariffs on Canada and Mexico come true, which, as we just heard from President Trump, look like they will go into effect tomorrow, it's going to probably cost you more money.
Yeah, we got with us Keith Naughton. He's Bloomberg News auto reporter. He joins us from Detroit. The tariffs, if imposed on Canada and Mexico, and like Carol said, we did just hear from the president, that will happen tomorrow. How much exactly will they drive up the cost of a car in the U.S.?
By quite a bit, Tim. There's an outfit out of East Lansing, Michigan, a consultant, the Anderson Economic Group, and they have estimated the price increases could be as much as $12,000 on an electric vehicle. They sort of analyzed a bunch of different body types. The smallest was $4,000 on a crossover utility vehicle. Pickup truck would be up about $8,000, large SUV up about $9,000. So it would really substantially reduce auto sales because people wouldn't pay that money.
Keith, all cars from all automakers here in the U.S. kind of impacted equally?
No, the ones that are impacted the most, Carol, are the ones that are either made in Mexico or Canada or have a lot of Mexican and Canadian content, parts, engines. For example, Ford doesn't build any big pickup trucks in Canada or Mexico, but they do build big V8 engines in Windsor, Ontario that go into those pickup trucks. So there is this very intricate web of supply throughout North America, because there's always been a free trade agreement here, or at least there has been for the last 30 some years. And that has created this enormous North American industry that now is going to be roiled by all of this.
Yeah, I feel like for how long have we touted this incredible, tremendous global automotive, global supply chain that's out there? It's so entrenched, right? And it's not easily shifted or recreated.
That's right. I mean, you just can't flip a switch and have everything built in the United States. It doesn't work that way. General Motors, for example, builds its Chevy Silverado pickup truck in all three countries. So now they're trying as fast as they can to centralize it in the U.S. But the reality is, what we're told by the consultants who are working with the companies, is there's just versions of that truck and other models that just will disappear from the marketplace until this gets resolved.
Keith, is there a car company that is not affected the way that the big three are? Is Tesla a company, because it does make its U.S. bound autos here in the U.S.? Is that not an issue for them?
Tesla is less affected. Tesla has been looking at building a factory in Mexico. That seems like things are on ice right now as that concerns. But Tesla is still being affected by the sentiment. I was watching all the stocks as President Trump was speaking a moment ago and said that these tariffs will go in place. Well, every one of the U.S. auto stocks, Tesla, Ford, GM, Stellantis, they all fell as soon as he said those words.
Do some models just go away, or not going to be offered by some automakers because it just doesn't make sense?
That's the thinking. For example, Ford only makes the small Maverick pickup truck that is so popular down in Mexico. They can make it pencil because labor costs are lower down there. The Bronco Sport, another popular SUV that Ford makes, only made in Mexico. The Mach-E, the Mustang Mach-E electric vehicle, only made in Mexico. All three of those might get paused, as I was told, until this gets resolved.
You keep saying until it gets resolved, implying that it will get resolved. Is that the attitude that the automakers have, that this is a temporary sort of issue for them?
Absolutely, Tim. They see this particular tariff, the 25% on Canada and Mexico, as separate from the other tariffs that Trump is imposing, on steel and aluminum. The reason being is Trump's rationale for the Canadian and Mexican tariffs are border security, right? It's about undocumented immigrants coming over, illegal drugs. It's not about trade policy. So in the view of Detroit, that means that this is something that can be negotiated and resolved between the three countries. And they are expecting this to have a duration of 2 or 3 months at the most.
All right. So if they only think it's going to last maybe a couple of months, 2-3 months, as you said, Keith, will U.S. automakers kind of eat any increased costs, not pass them off to consumers, or if they do, does that mean they're going to have to cut back on some jobs? Like, I don't know, what's the impact?
Yeah, it's pretty hard to eat a 25% tariff. You know, profit margins in the auto industry are single digit, and they struggle to keep those. Remember, all of these companies are developing new electric vehicle lines that they are losing billions and billions of dollars on. Ford lost $5 billion on its EV business last year. They don't have a lot of money to throw around. They don't have a lot of margin to give up. So if you tack 25%, you can't make a business case out of that.
Right.
They are trying to take actions that mitigate it. They're bringing as many parts as possible and engines and things like that over the border into the U.S. to try and avoid the tariffs or build up a stockpile to give them a buffer. But that only lasts so long.
Yeah, exactly. Just to build up kind of their stockpiles. Hey, Keith, thank you so much. Glad we could talk to you about this. Keith Naughton, he's auto reporter at Bloomberg News, joining us from Detroit.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
If you go CRYP Go on the Bloomberg terminal, it is just a sea of red. Ethereum down 16%, Bitcoin down 9%. Donald Trump's announcement that the U.S. will include 3 lesser-known digital tokens in its strategic crypto reserve was greeted with skepticism in the industry, investors questioning the project's merits, and the coins he selected giving up some of those initial gains from yesterday. We got with us stacy-marie Ishmael. She's executive editor for crypto here at Bloomberg News. Stacy-Marie joins us here in the Bloomberg Interactive Brokers studio. I want to start with what happened with the reaction that we're seeing right now.
Yeah.
Is this basically the market saying, we don't buy what we saw in President Trump's Truth Social post yesterday?
I think that there are a few different things happening at the same time. One, obviously, the risk-off environment that you just heard, Carol talk about in terms of tariffs. But the other is, you said the president on Sunday midday was talking about, here are some specific tokens we're going to include in a reserve. There is no U.S. crypto reserve, right? There is a set of potential theoretical propositions floating around, but the U.S. government has not spent any money so far on buying any tokens, whether Bitcoin, Ethereum, Cardano, any of the ones that the president named in his Truth Social post. There, as a result, there are also no details around what that would look like, right? Like, what are the actual reasons that the U.S. government would need to hold these things? Would they spend new money on this? Would they, as some people have proposed, sell the gold in Fort Knox to buy it instead? And that, I think, lack of specificity, that lack of clarity, and the feeling of like randomness in terms of the selection of the tokens that the president posted about are all driving this very much reversion to Friday, right? Friday, like people left the office with crypto down, like Bitcoin down 28% from its all-time high, woke up on Sunday with everything like looking in the green again. And now they're like, well, that was a blip.
Wait, a volatile crypto trade? How did that happen? Stacy, what do we know about what it would take to create a U.S. reserve? Like, can the president just sign an executive order and do it? Does he need the Treasury? What actually has to happen to create a strategic reserve?
First of all, there is some concern about language. So when the president signed the first executive order on digital assets shortly after his inauguration, in that executive order, he used the phrase that the working group on crypto would study the potential for the creation of a crypto stockpile. And that was an interesting word because it was different from the previous discussions about reserves. And what folks took that to mean is like, okay, the US government actually already holds some crypto because it seized it from criminals, right? So if you ever see a big headline about the Department of Justice seizes $3 billion, like they're holding that crypto somewhere. But a stockpile is distinct from a reserve in a couple of ways, including suggesting that they would just not sell what they have rather than buy more. Right. So that's one of the first big differences. The second is generally reserves are managed by the Treasury. And so there are other processes and protocols that would theoretically have to be followed by the Treasury and the folks around to decide, one, how would that be funded? Right? Like, at what levels, where would we put it, and what would be the ratios of if we're going to hold Bitcoin or Ethereum? And is that going to affect the other assets that the Treasury does actually have in reserve, like gold or special drawing rights or other foreign currencies.
One thing I noticed is that a lot of people in the weeks and months leading up to this, myself included, have been using the term strategic Bitcoin reserve. And it struck me yesterday when I saw this post that Bitcoin wasn't even included
in the first one. Yeah, there are a bunch of very cranky Bitcoin fans on the internet right now because when the president
was cranky, or a little bit more, maybe.
I mean, we were trying to keep it PG, but when the president was campaigning in Nashville at the this big Bitcoin conference, which is where he first kind of pivoted to crypto very explicitly. He gave this rousing speech around how he wanted to make the US the crypto capital of the planet. And he said very specifically, he talks about a Bitcoin reserve. RFK Jr. was also kind of talking about a Bitcoin reserve at that point. And so from July to kind of January, when the executive order and the inauguration, you really had this belief that if the US was going to buy crypto, it was going to buy Bitcoin specifically. Yeah. And so folks have been taken by surprise to see the inclusion of these other tokens, sometimes called altcoins. It's not the biggest, so Bitcoin's the biggest, Ether is the second largest. It's much smaller tokens by market value that don't necessarily have the same name brand awareness, as it were, as the big two.
Is it, I'm just thinking about the way that politics has come into this, and it seems like people are very politically aligned when it comes to, yes, there should be this, or no, there shouldn't be this. Is there an argument, like an intellectual argument, about why we should have a strategic crypto reserve?
The arguments that have been made by the folks who believe that there should be a strategic crypto reserve, whether it's just Bitcoin, whether there's others, is kind of the same for, why they think the US should continue to be like a global superpower in terms of dollars. These are folks who really do take the position that crypto tokens are the future of finance. They are the future of money. They are a means through which more and more people, companies, countries, individuals will be transacting in payments across borders. And as a result, in the same way that the US wants to be a global leader in, say, artificial intelligence, for them to be a global leader in finance, they need to be investing in the future. And for these folks, that future is cryptocurrencies.
But with, something like oil, for example, it makes sense that I think a lot of people would look at, the Strategic Petroleum Reserve and say, we use a lot of petroleum when we fill up our tanks, buying clothes.
It's a hard asset, right?
Yeah, it's a hard asset. To me, just being a skeptic, I have some skepticism about the actual case that the government could make to taxpayers that this is a worthwhile use of money.
The case that the government hasn't made a case for this is the first thing that I would say, and there hasn't really been any effort to do so, right? We're not seeing David Sachs, who is the crypto czar of the United States and a venture capitalist, kind of going out making speeches in favor of one thing or another. It's more like the folks who think this is a good idea think it's a good idea, and that should self-evidently mean everyone else will agree with them, right? Like there hasn't been a communication strategy around this. The folks who are really trying to communicate that value are people like the CEOs of crypto exchanges, who will obviously benefit in terms of, if suddenly a lot more people are buying a lot more crypto tokens and potentially using their exchanges to transact. But I think it's been very hard to make the argument that people who don't already care about crypto are going to start caring about this because it's something that has been named as a priority of the current administration.
Yeah, I just think about it playing out in the American public of people who are maybe struggling to pay for things,
like
put food on their table,
and
just saying, well, wait a minute, you're going to play around with American, government money, and the taxes I pay on basically what some would say is a gamble, right? Or it's kind of akin to that.
I mean, at a minimum, it's, as you pointed out, very volatile, right? Yeah. And I think that some of in the reporting that we've been doing over the past few days, where people have started to pay attention to this is in exactly that dichotomy that you're describing. They're like, hang on a minute, I can't buy eggs, but we have folks telling me that I should care about this digital asset that I don't have access to, I'm not interested in. Or questions of like, how are they going to pay for this? Is this why people at federal agencies are getting fired, right?
Yeah.
And so I think folks who are not necessarily in the industry, as it were. They're not insiders. They don't walk around touting the merits of these things on YouTube, are having a really hard time understanding why this is getting so much attention from different people in the administration.
I just want to get a glass of wine and just kind of continue this conversation with you, to be quite honest. So you please promise you'll come back soon. Stacy-Marie Ishmael, she is executive editor for crypto here at Bloomberg News. You can check her out too on the Bloomberg and at Bloomberg.com.
I do want to bring in Adam Sullivan. He's CEO of Core Scientific. It's the company that provides high-performance computing infrastructure for digital asset mining and AI infrastructure. The majority of its revenue does still come from crypto mining. Adam is back with us from Florida. Adam, come on in here. Should, in your view, the U.S. have a strategic crypto reserve?
I think it's been an interesting proposal. The Trump news yesterday was definitely interesting. I think it could be a good addition to our strategic reserve of all currencies that we have today.
Well, and to that point, I mean, just the volatility we're seeing, and we just had a conversation with our own Stacy-Marie Ishmael about, how you justify something like this in terms of the strategic reserve, especially when it would be tax dollars, American tax dollars going to it. I think we may have talked with you about this before. Like, how do you justify it in something that is a very volatile trade at this point, when there are a lot of Americans who are just kind of struggling to either put food on their table, pay for rent, mortgage, whatever it may be?
Yeah, I think the interesting part is, why are a lot of people buying Bitcoin right now? Bitcoin's at its highest adoption rates we've ever had in history, and it's only continued to increase. So I think what the new administration is doing is listening to the people, and the people are saying, we're buying Bitcoin to protect ourselves against potential inflation in the future, as one of the reasons why they're buying Bitcoin. And I think the administration's listening, and I think, that over the long term could be a really good addition in terms of just protecting at least one part of the U.S. government balance sheet against inflation.
Adam, how do you know that's why people are buying Bitcoin? Don't you think that some people could be buying Bitcoin because they think number is going to go up?
Well, I think that's one of the reasons, right? Number go up because inflation go up. It's one of those situations where a lot of people were burned by the last 4 years. They watched their pay stay relatively similar, and they watched the price of everything that they were buying increase significantly. So it's been a huge issue for the entire population in the United States that their buying power has just been decreasing over the past 4 years.
We have still joining us. We wouldn't let her leave the studio. Stacy-Marie Ishmael, she's executive editor for crypto here at Bloomberg
She's been
News.
listening along. We thought, let's bring her into the conversation.
I think my question to you is, for the folks who have, kind of said Bitcoin is an inflation hedge, et cetera, one, we're in an environment in which we are potentially seeing interest rates globally go down as the rates of inflation decline. What does that mean for the people who think, okay, well, if I need to buy when it's an inflation hedge, should I be selling into a lower inflationary environment? Or to what extent is the fact that, the administration might be spending money on this or prioritizing this kind of contributing to inflation expectations? Like, how do you see these very complicated macroeconomic things playing together?
Yeah, I think it's a very complicated situation, but when people are buying Bitcoin, they're buying it for the long term. It's not necessarily a trade for individuals in the retail shareholder base all the time. That's mostly what's been touted, because a lot of the public companies related to the exchanges, they obviously want people to be trading more frequently. I think many people, though, are buying Bitcoin and holding it long term, especially you watching high net worth clients. They started buying Bitcoin back in 2017 as a means to actually escape the US dollar. And I think that's what we've seen over the past few years, especially as we've seen adoption continue to increase. We're seeing it not only at the retail level, we're seeing it amongst public corporations today. And it's not just inflation. There's a number of other factors that obviously play into this, but people aren't buying Bitcoin just because they want to protect the short-term inflation. They want to protect against the long-term inflation where, a dollar in 1980 went a lot further than it goes today in our economy. And so people are just concerned about how high inflation could go in the future, because we don't know, based on the administration, what the policies are going to be, where rates are going to go, and how high inflation could potentially be in the future.
What about the notion that, these are supposed to be decentralized and not supposed to be controlled by states? If a state does buy a large number of a digital currency, does that defeat the purpose that, these were created for?
Yeah, it goes back to what we were all hoping for in 2016, saying we hope that companies start talking about buying Bitcoin. We hope the government starts talking about buying Bitcoin. Well, now it's here. We kind of got what we asked for. And as long as Bitcoin is distributed enough amongst, I would say, individuals versus whether it be governments or corporations, then Bitcoin maintains its core competencies, which is a distributed network. I think as we've started to shift towards greater centralization among corporations, amongst nation states, then things start to come into play where people start to question the long-term security and integrity of the network. Mm-hmm. But we just need to maintain a truly distributed network, and then we'll have the security that people can trust in to continue to buy Bitcoin.
Adam, we only have 20 seconds left. Give us 20 seconds on the $1.2 billion expansion of the relationship you have with CoreWeave.
Absolutely. We couldn't be more excited about our expansion in Denton, Texas. This is another 70 megawatts to the 500 we signed last year, and it takes us above $10 billion in contracted revenue over the course of the next 12 years. So we couldn't be more excited about continuing to grow our relationship with CoreWeave.
All right, Adam, thank you so much. Adam Sullivan, CEO of Core Scientific, joining us from Florida. And of course, again, our thanks to our stacy-marie Ishmael. She is executive editor for crypto right here at Bloomberg News.
This is the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just under 18 minutes to go until we wrap up the trade on this Monday, first trading day of March, and it is definitely a risk-off kind of trade. You heard Charlie and Bill Maloney breaking down the numbers. We're pretty much at our lows of the session, and it really seems to be a 1-2 punch when it comes to what we've seen about tariff actions. Again, the White House saying that President Trump signed an action to impose a tariff against China at 20%. And then earlier at that event at the White House, talking about the tariffs against Canada and Mexico expected to go forth tomorrow. So again, we've seen the markets take legs down again, down more than 900 points on the Dow Jones Industrial Average, a 2% decline. S&P 500 down 140 points. That's good for 2 1/3% to the downside. And the NASDAQ 100 down 2.8% down, 581 points. So again, seeing investors really move to the downside here when it comes to the trade.
Now, let's see what Alexis Browne Roberts has to say about this. She's COO at Alexis Investment Partners. She joins us once again from Montgomery, Texas. Let's drive to the close with her. Alexis, you're bullish. You think this is just noise on the way to an S&P 500 that finishes the year at what? You think 7,000 could be a possibility?
Well, look, days like today are always hard to watch. They're hard to stomach, but you have to look at it within the context of where we've been overall. And really, if you look at the moving average on most major indexes, we're still definitely in an uptrend. Now, I'm not at all downplaying all of the risks that are being seen. And again, kind of the pain that happens when you take a leg down like this. And so we're definitely still watching everything that's happening, but we think it's important to kind of try to keep your emotions in check and try to be steady in an environment like this, and not make too big or drastic of moves, and instead try to move fairly incrementally.
But tariffs, if they are imposed, which they seem to be, and they are, if they are something that last and aren't just a 1 or 2 or 3 month thing, that's a game changer, is it not?
Carol, that's exactly one of the questions that are out there. And I think when it comes to tariffs, it's really important to recognize that this is just one of the unknowns that's happening right now. If you were looking at tariffs in a vacuum, yeah, it's hard to say this is a great thing, but they're happening with so many other moving parts right now. And things like that question is something that I can't really answer. Nobody really but the president can answer. And it's something that we're going to have to watch unfold, and really just watch how the market digests. things.
Alexis, what are those other moving parts that you're talking about specifically? Because there are moving parts that are significant, and then there are things like tariffs that are a really big deal, and certainly many market watchers would say when you've got CEOs of companies saying this is going to increase my costs, this could be problematic. We talked earlier with our Keith Naughton about what it would do possibly for the cost of cars, maybe as much as $12,000 more that an American would have to pay as a result of these tariffs on some models. I mean, that's a big deal. So tell me about the issues that you are weighing tariffs against.
I don't know if it's even weighing tariffs against, but just looking at it within the full context. I mean, yes, that's definitely an issue there for those specific names. And we will be watching that. But there's also, government cuts going on. What's going to happen with tax policy? What's going to happen with foreign trade policy? That's tariffs, for example. There is just a lot of levers being moved. What is the Fed going to do? I think it's really going to be interesting to see what the Fed decides to do this week. We have a lot of just economic data coming out this week, too. And so while the White House is definitely something to watch, it's not the only thing to watch. And it'll be interesting to see how the market digests this from here. Not to mention just we're watching markets, we're watching those uptrends, we're seeing how investors choose to play this. So yes, tariffs definitely an issue, something that we're watching, but not the only thing.
Our clients, is the phone ringing? Are clients calling yet?
So far, there's been a couple of clients that have been nervous, but overall, no, actually. And hey, if they want to talk about it, we're here, absolutely. And if you're feeling skittish, I definitely recommend talking to your advisor. I mean, if you've been aggressive and you're watching this going, oh no, definitely talk to your advisor. We don't see any reason not to. If you're uber aggressive right now, perhaps take it off a little bit. Or if you've been sitting on the sidelines going, when's my chance to come in? Maybe this is your chance to come in and buy some of those names that have just been so richly valued. But either way, I started out talking about, hey, check your emotions. Talking to your advisor is a good way to do that. Luckily, so far, a lot of our clients have been through a lot harder environments with us, so we're not hearing that. I mean, overarchingly, you're hearing everyone talk on the news as if we've been in like the middle of this huge bear market. But really, once again, if you kind of zoom out from this current pain, you'll realize we've been in an uptrend and we're fallen, yes, but we're not in this huge bear market that maybe is warranting that type of reaction.
So not time to panic yet.
I would hope not. And either way, you don't tend to make your best investment decisions when you're panicking.
Well, having said that, you've got clients calling. Are there anybody who's calling and said, wait, stuff's on sale. Stuff just got cheaper. Let me put some new money to work.
I would say for the most part, the people who are calling are just saying, hey, what do you think right now? More so than trying to say, hey, let's do this, let's do that. And I think that's part of why they hired us. But there's definitely some on both ends of the aisle. I mean, last time I was on with you guys, I told you half of my clients are ecstatic with what's going on and think this is great for the country and great for their wallets. And the other half of my clients are looking at things going, oh, dear Lord, what's happening? And very negative on things. So yeah, I definitely have clients on both ends of the spectrum there.
Okay, you still like QQQ. Certainly not having a great day today if you're long the Qs, down 2.5%. You also love mega cap growth, VUG, that fund. What tells you that this is the environment to keep buying those tickers?
So one thing to note there, Tim, is that I like them within the context of a broadly diversified portfolio. So currently, we're happy with the level of exposure that we have to tech, so the QQQs, the VUGs, and we're not looking to necessarily add to that right now. But if you're in that position where you've been underweight tech, maybe today, a day like today, it would be a good time to just incrementally buy in because those names have been just so richly valued. I think it's, again, just in terms of where you are in your portfolio right now. I wouldn't want to be sitting on the sidelines, because if you've been sitting on the sidelines there, then you have missed out on such a big move up. And that probably is going to still be a factor. I mean, the number one thing that we need to keep this bull market going is productivity. And the number one way that we see driving productivity growth from here really is AI. Now, I wouldn't overdo the tech exposure here. If you're already fully weighted in tech. I mean, our largest position right now is gold at just over 6%. So it's clearly not the only place we are.
Yeah, but gold to me says you're being cautious. So that's kind of interesting that that's your largest position. I mean, I'm looking at a NASDAQ 100 that's down 3% for the year. You mentioned QQQ. It is down more than 8% since mid-February. So it's been on a move down over the last couple of weeks. What's to say that we won't get down 10% or 15% or 20% on the QQQ? And why would investors put money to work at these levels?
Again, that's where, so kind of addressing two things there. First, I'll address the tech side and then the gold side. So, I mean, there's a lot of things that you could be worried about at any point in time. And if you're too debilitized with things, you won't make any good decisions. I'm not saying to go all in on tech here. I'm just saying I wouldn't necessarily go all out on it either. I mean, you're seeing a lot of investment in those names right now. Just now, they just announced Taiwan Semiconductor is going to put another $100 billion into Arizona. That doesn't exactly spell, hey, the end of the tech market to me. But at the same time, is that the only place you want to be? And that's where I would say gold more is. I don't necessarily think that you need to be cautious in order to have gold in your portfolio. I would look at it more as an opportunity to diversify into an asset class that moves totally separate than equities. So that's why we have our gold exposure and our selective REIT exposure as well. I mean, there are a lot of moving parts going on. It's not like it's all rosy outside. And part of that is just a lot of geopolitical risks as well as federal central bank risks all around the world. And so that's kind of where we have our gold exposure. Did I fully answer both of those questions there? I feel like it was kind of nuanced.
No. That's fine. That's fine. Hey, listen, we got to run. Just kind of staying on the market here. Alexis, thank you so much. Alexis Browne Roberts, Chief Operating Officer at Alexis Investment Partners out there in Montgomery, Texas.
This is the Bloomberg Business Week podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.